So now it is just past 2 p.m., time zone GMT plus 2 on the 25th of May. The pound, we're just looking at the GBPUSD 15-minute chart, and the pound did take that nasty tumble that I suggested in an earlier video of day 7. The pound was trading up here this morning at 9 a.m. The 200 hour was just above the 100 hour. I said to be careful because that to me is a sell signal. The pound would go down versus the GBP most likely. That is what happened. It's pulled it right down to a low of 1.414 from a high of 1.42, above 1.42. And it's arguing. There's buyers and there's sellers. The sellers are trying to pull the 14-hour moving average down and through the 100 and 200 hour, and the buyers are trying to pull the 200-hour moving average up. So we'll have to wait and see. If you did want to buy, this would have been a good spot to buy with a stop loss perhaps in line with this candle here, stop loss down here. The likelihood that this trade will go up is quite good because the 35-hour is above the 50-hour here, and the 100 it did make the effort to pull the 100 above the 200, so it will likely go up. That's what I would have put a buy here and a stop loss down here, 1.41284, maybe even lower, but it depends on what you can afford, how much capital you've got, and how much you believe in a trade. Right, let's go and have a look what the Nasdaq futures are doing. Nasdaq futures this morning kept climbing. Our buy price, I'm just going to go and fetch our buy price. That would be just down here. There's our buy price. Way down there, started climbing. We opened it on the 19th of May. Down here, that's where we opened the buy. It says opening rate. It climbed, it flew back down again. I'm talking nonsense. This was earlier in the month. This is where we opened the buy. When it went back down before the FOMC minutes, opened the buy and has climbed nicely since then. Took a dive on Monday morning at the open and has been climbing again since then. I wouldn't be surprised if the price doesn't come back down to here today. 200-hour moving average on the 15-minute chart. Maybe at the open of the market, the price might pull back and then later we'll pull that moving average up further with it. Let's look at the 1-hour chart. There's our opening on the 19th of May, and it is this moving average is slowing a bit, so we might see a price pull back down to the 15-minute 200-hour, like I said, to pull this moving average back up again so that we can get up and above, well up and above the 200-hour on the 4-hour chart. Let's just make this a bit bigger. So it has kept above the 200-hour on the 4-hour chart. It now needs to get the 35-minute and the 50-minute through. So it might come down and pick up and fly up again to pull these moving averages through, or it might crash. That's your risk to take. But I've got a stop loss down here. I might move my stop loss up a bit higher now, so that if it does fall, I'll still make a profit. I'll probably do that. Because if it falls below the 50-hour on the 4-hour chart, if it falls below that right there, I would think it's going to carry on falling. And that is how you measure your risk, with your moving averages. Look at every chart, and let's watch the economic indicators from the US today also to see what the results of the new home sales are. And there's also another Federal Reserve speaker that will speak today. we'll have to listen to what they have to say about the interest rate also.